Let's talk about tax. How is trading and disposing of cryptocurrencies taxed in Malta? What are the possibilities to reduce the effective tax rate? The right setup for your blockchain business. Joseph Mircea, BDO, Malta.
Hi, good morning. I'm Joseph, tax partner at BDO, and in the next 10 minutes we'll be discussing tax. We'll be talking about tax. Tax is a particular topic which in the cryptocurrency environment is quite often forgotten. So what I'll be doing is I'll be giving you a very, very concise summary of what is the Maltese tax treatment of transactions in cryptocurrencies. The Maltese Income Tax Act has two articles within it, the legal framework, which bring to tax transactions. Those which are of an income nature and transactions which are of a capital nature. The tax treatment of transactions which are of an income nature are quite simple, taxable. Transactions which are of a capital nature will be taxable only and exclusively if they fall within the parameters of the assets and the transactions which bring taxability. So if you have a property, a security, an interest in a partnership, or a beneficial interest in a trust, and you have a transaction of a capital nature, there's going to be a tax charge. If you had a close look at that particular article, Article 5, there's only one particular phrase, letter, word to be exact, which could potentially be subject to tax. Securities. So when we have security tokens and we have a capital transaction, we could potentially end up subject to tax. So what are securities? Securities are shares and stocks which participate in the profit of the company, so you have a right to a profit, to dividends, and which do not carry a fixed rate of return. Having said all this, what we need to do in order to establish taxability is whether we have a transaction of a trading nature, so the day-to-day trader is going to be taxable always. The hodler, the individual which is holding the crypto asset for a very long period of time, usually I tell my clients, ideally at least 18 months over, 1 year and a half over, you're going to be taxable only if you have a security. If your crypto asset is a utility token and it doesn't grant any rights to profits, you're going to be completely outside the scope of Maltese tax. So how do you distinguish between transactions which are of a trading nature and those which are of a capital nature? And this depends, obviously, on a number of things. In particular, what is your intention? What is the intention of the individual which is acquiring that particular token? In addition, one needs also to look at the frequency. How frequently do I acquire and sell cryptocurrencies? What is the interval of time between the purchase and sales? And how close is this particular activity to what I usually do? So if I am a stock trader, an individual which is all the time trading on stock exchanges, it's going to be difficult to claim that I am investing by way of a capital nature in cryptocurrencies. When you combine all these 5-6 different factors into one particular scenario, you will end up with an indication as to whether you have a transaction which is of a capital nature or a transaction which is of an income nature. As long as I'm trading, there is absolutely no way that I can avoid the Maltese tax net. If, however, I am able to classify my transaction as a transaction of a capital nature, I will most probably be able to avoid any Maltese tax, as long as I'm not selling a security token. Whenever I end up in the taxation net, there are also opportunities. Opportunities such that on your taxable income, you end up in a very low effective tax rate. How? By doing all this activity through a Maltese company. A Maltese company is taxable without any exception at a tax rate of 35%, which is extremely high. But upon a dividend distribution by that company to its shareholder, that could be a Maltese shareholder, foreign shareholder, a company, or an individual, that particular shareholder becomes entitled to a tax refund under the refundable tax credit system. That tax refund varies according to the type of income, but in the case of trading income from cryptocurrencies, it's going to be a 6th, 7th refund. So the company pays 35, but upon a dividend distribution, the shareholder is going to get back 30. What's fantastic about that system is that not only you end up with an effective tax rate of 5%, the time lapse between the tax payment and the refund is usually not longer than 2 weeks, unless there's a problem with the bank coordinates, is going to be between 10 days and 14 days. In the case of individuals, there is also the remittance basis of taxation. So individuals which are resident in Malta, but they do not have the intention of remaining resident in Malta forever, so they never acquire a Maltese domicile, those individuals are taxable in Malta only on income they derive from day trading in Malta, foreign source income they remit to Malta, but never on capital gains. So if you have an individual which is in Malta as a Maltese tax resident, but he has never acquired a Maltese domicile, so he doesn't have the intention of staying in Malta forever, that individual will always be outside the scope of Maltese tax on his foreign source capital gains. So what I've done in these 8 minutes is I gave a summary of what are the tax repercussions on trading in cryptocurrencies. Later on, in the video masterclass, I'll be discussing the VAT implications of carrying out an ICO, the VAT implications of trading in cryptocurrencies, and I will also be discussing what are the tax repercussions of carrying out an ICO, what is the point in time where that particular person, issuer, the case of an ICO, would need to collect tax and VAT on that particular transaction. Thank you for your attention.